Hello and welcome to Gold and Silver Assets. It's Sunday, the 20th of December 2020. As you know, I do like to look at the precious metals from multiple angles, and today I thought we could discuss an aspect of psychology. Now, many of you probably know and understand what I'm going to talk about, but I thought it might be useful to go over, especially for the beginners amongst our viewers. I know that certainly when I first started all this was something I didn't really think about or grasp. And I actually went into the markets initially thinking that things would be quite black and white and things could be worked out logically. But of course, experience taught me that that's not the case. In the markets, it is possible to be wrong and profitable. Here's why. Let's start by talking about why we feel the need to be right. I think that although it will partly be related to ancient survival instincts, a lot of it's actually due to the way we are trained at school. The whole system of tests and exams rewards being right. The more often that you're right, the higher up the academic ladder you climb, and the more praise you're going to get from your teachers and your parents. But there are a lot of problems with this way of thinking. It does assume certainty, so it assumes that there's a definite right answer, it's very black and white, it's fixed. It also risks breeding a know-it-all mentality, and that can result in being unkind, impatient, insensitive, and lacking in empathy. And these aren't exactly characteristics to be proud of. Needing to be right can also stifle the development of new ideas for fear of being wrong. Those who feel the need to be right tend to be poor listeners, and they tend to be more closed-minded. I also believe that the way we're trained has led to myths about being wrong. For example, being wrong is equated to failure or ignorance, or in some cases, being wrong is equated to being bad or evil. And I think this is all upside down. Being wrong and making mistakes actually does provide some really, really valuable learning experience. And certainly I found that I learned a lot more from mistakes than successes. Of course, all this does depend on the situation that we're talking about. So when we're sitting an exam, yeah, it is important to be right if you want to achieve a positive outcome. If we're talking about a life-threatening situation, then yes, being right is absolutely crucial. But when it comes to the markets, that's a whole different ballgame. And it's somewhere that I think that there are much more important things than being right if you want to succeed. How do we define being right where the markets are concerned? Well, we might say that we think the price of something is going to go up, and if it goes up, then we might say we were right. And that's where most people end their definition. But I think that there's a lot more to it. Even if we're correct about the direction, were we correct about the magnitude of the move? Moving up a fraction of a percent is very different from moving up 10%. Even if we got that right, did it occur over the anticipated timescale? Even if you did make the right call on all of those things, then did you make the right decisions and act on them? Did you make the decision to buy in or sit it out? Did you buy at the right price at the right time? Did you size the position appropriately? Did you set a stop loss and act on it? So, as you can see from all this, being right in the markets is actually multi-dimensional. I actually think that there's something far more important than being right or wrong. And of course, that is being profitable. So it's really important to talk about profit and loss rather than being right or wrong. We all understand that our primary goal is to be profitable in the markets, yet I see so many people getting distracted with being right, which is not the same thing. The win-loss ratio is the ratio of the total number of winning trades to the number of losing trades. And so it is a kind of measure of how often a trader is right. If someone tells you that they have 100% wins, then I think it's safe to assume that they very rarely trade, or they have a ton of inside information. This metric doesn't take into account the size of the wins or the losses. Someone with a high win-loss ratio is not necessarily in profit. For example, they could have made 10 trades, of which 8 were small wins and 2 were losses that wiped out all of the gains. And this is where risk and reward matters. It's really important to try and keep your losses small and maximise your gains. But of course, that's much easier said than done. If we use the metrics of right and wrong, then here's an example of a portfolio that you could say gets it wrong. And this is what the example mining stock portfolio might look like. So let's say that this portfolio consists of 5 stocks, and we've got stock A, which lost 1%. Stock B did okay, it gained 30%. Stock C lost 20%. And stock D lost 10%. So this isn't looking great so far. Even if there is a win on the next stock, you could say that, well, they've been wrong more often than they've been right. And if this person ran, say, a mining stock newsletter, then I'm pretty sure they'll be getting hassle from the subscribers about how often they're wrong. But have a look at this. Stock E was not only a winner, but it was up 800%, making the whole portfolio very profitable. But sadly, despite this, it's the being right and wrong at that very superficial level that many of the newsletter's customers might concentrate on. In conclusion, being a know-it-all will serve you well for exams, but it won't get you too far in the markets. The market couldn't care less who's right or wrong. It just does what it wants to do, and we just have to work with that. Imperfection is something that should be accepted. You're not going to consistently buy at exactly the right price at the bottom and sell at exactly the top, but that doesn't really matter so long as you come out ahead. And for success, your primary goal should be profit, not being right. Next up, the market update. Well, it's been an interesting couple of weeks, hasn't it? We've seen lots of assets rise, some of them quite dramatically, and a particular 3 cheers to the uranium stocks. They managed to make some fantastic gains, despite the fact that the spot price of uranium didn't really budge. So yeah, as Bruce Forsyth would have said, didn't they do well? Anyway, let's start with gold priced in US dollars on the daily scale. And remember how we talked about this zone over here being strong support, and that was my reasoning for thinking that this was a potential bottom. And of course, price bounced off of that relatively strongly initially as well, and it's continued upwards in this zigzagging pattern. Now, we did have someone actually say, well, it's too early to call that a bottom. It really depends on your point of view, though. If you're looking at short time scales, and of course, we've got people who trade on a variety of different time scales here. So one person might have said, well, yeah, this is a local bottom and I'll be selling it up in the middle of this channel over here. Then yes, that was a bottom. If you're looking at longer time scales, and so which I am, then I said that I would need to see it go above the 1860, and then I'd be more confident once it goes above that 1920 US dollar range that would be going up towards new highs. But again, you can never be sure when the bottom is. And so someone actually said, well, yeah, it could go up and go, to above 2,200 and then come back down to 1,500. Then that would be the bottom. But I think that's all semantics, really, isn't it? It's an individual thing. And I certainly couldn't account for every single person's timescale on a channel like this. So you've got to remember that I'm just giving my opinion from my point of view, but that doesn't mean that that's going to be right for you. You just have to kind of take what I'm saying in the right context there. If you're talking about holding gold for an eternity, well, then you can never actually call a bottom, because as soon as the whole of humanity is wiped out, then gold will be priced at zero, and that would be the true bottom. So you see what I mean? So it's not a black and white thing. So when I'm saying a bottom, I'm saying that on my time scale, basically. And of course, okay, yeah, let's say it goes up here, goes up to 2,500 and then comes back down, to 1,300, say. I'm not saying that's going to happen, but the thing is then, the point is that some people would want to take advantage of that rise rather than wait for a lower price, which could take years. We don't know. So all these things, you've just got to think in terms of time scale and whether it fits in with what you're doing. Anyway, let's go back to this price action here. I'm still feeling positive. I'm feeling bullish about gold. I can't help it. So, of course, we just have to keep watching it. And remember, I am willing to change my mind on that. If price goes below this 1764 level, I would start to get worried. And particularly if it's a strong move below that. But I'm doubtful that's going to happen. My thoughts are that I've drawn this trend line here. Perhaps it's going to zigzag upwards here before breaking out above this line. I think once we break above this line, I'd be getting increasingly bullish about this. But until we do that, of course, I mean, one possibility is that we could get something like this and then dive back down. That's certainly within the realms of possibility. I'm not ruling that out. But as I said, I've just got positive feelings about this, and based on what I'm seeing in silver, which I'll explain in a moment, again, that makes me think less likely. But we just have to let the market tell us what it's going to do. Okay, let's move on to silver priced in US dollars on the daily scale. And silver's done better than gold in some ways. So the first thing is that gold actually made a lower low, as we saw in that last chart, before turning around. Whereas here, this was actually a higher low compared to here, which is a very positive thing. The other thing is that we've got this quite bullish pattern here, and it's actually broken out a couple of days ago. It broke out over here. And again, that's a positive sign from my point of view as well. Now, on the website, I did say that this $26 area would be resistance. And remember that we put that there months and months ago, back here, and it's holding still as resistance. So we just got knocked back down from there. I think it's going to probably take another go at this to get through there. So we may get, again, as with gold, possibly get knocked back. I think we've got support here at around 24.5, not only at this trend line over here, but also the fact that we've got all this support now from back here. So I think that's going to be supportive. So what we're looking at is maybe doing something like this. It could go straight up through there, or might faff around here for a bit before going through there. but we do have all this price action to work through as well. So that's going to be a little bit of resistance as well. So it depends on the conditions though. Sometimes gold can, silver can slice through these things. So we just have to watch. But there is more resistance at 28. So I don't think this is going to be plain sailing. It is going to zigzag a little bit. But I think it's just going to fight through there and make its way up gradually. So why do I think that gold and silver are moving up from here? Well, let's go back and look at silver priced in New Zealand dollars on the monthly scale. And you can do this for multiple other currencies as well. But if you look at my video on the anatomy of bubble tops and bare bottoms, you'll see here silver was in a bubble. I think that's pretty clear to say. And then price dropped. There's a very harsh bear market there. And to me, this looks like a bottom in formation, really. And then it broke out of there earlier this year, and it's come back down and retested that line, and that's acted as support. So to me, I would say that that was the bottom. Now, some people might say, oh, well, but this could go back down through here. If it did, then, you know, we'd be looking at prices languishing down in these low areas for years to come. That just doesn't sound likely to me, just based on, you know, the fundamentals and even just the technical chart. It just doesn't quite look like that to me. And so that's why I'm feeling a lot more positive about the metals. I feel that we've had the bear market and we've come out of it, and we're starting a new bull market, and that's underway. Let's move on to the gold miners. This is the GDX, and the miners haven't done quite as well as gold has. They are lagging a little bit. And we were talking about this downsloping formation. There was a little bit of concern here because it broke down from that, but then it just bounced back up again. And I don't know if this is a double bottom. It's probably a bit early to say that, but you know, price broke out from above that area here, but it's dipping down again. I think, as with gold and silver, you might get a little bit of a dip. It might not necessarily go back to this trend line either, and that goes for all of these things, because it just feels like a strong market, the precious metals. Anyway, so you know, maybe we'll just fill this gap and then make our way upwards from here. But yeah, the GDX chart is a little bit of an odd chart to look at. But those are my thoughts on that anyway. And I like this one. This is the SILJ chart. And I was looking at this, and initially I'd drawn it as a potential flag, in which case it's broken out from that flag just over here. But I got rid of all my lines anyway and just had another look at it just to see what's going on. And I think we've got this curvature here. And whenever I see this shape of curvature like this, then that makes me think that's a happy signal. Yeah, I don't know. Whenever you see these curves, that always, I don't know. The charts that I've looked at usually end up with a happy outcome in this direction over here. But yeah, if anyone's got any examples where that hasn't been the case, then yeah, just let us know. But anyway, if this curvature is correct, then I don't know if we will for certain or not, but we might go back and test this line here, in which case we're looking at about 1450 at the most in terms of a drop now. I don't think we're going to drop below this. This 13 area has been pretty good support, so just don't think it's going to go down that low now. In which case, you know, so one possibility is we go up here, and then up here we might dip down here, and then we're on the go. And of course, you know, that could be something like a cup or a cup and handle formation forming. But again, that's just another thing that makes me feel positive about these markets. And remember, when these things take off, they take off big time, and I don't want to miss it. So this could be potentially a last chance. And as I said, when we're talking about bullish moves, these things don't necessarily have to go back to their trend lines. They can fall short before moving on and catch people unawares. Thanks to everyone who sent lovely messages last week. Sorry I couldn't make it last week. I really couldn't talk. It was like having razor blades in my throat every time I spoke. So I thought it would be less painful for you and I just to give it a break. But I was so touched by all the lovely messages. I had lots of good wishes sent, and I even had some suggestions for treatments and cures. And I even had someone offer me international healthcare for free. That's so lovely. I thought that was really kind. Anyway, I think we've got a lovely little community, and I just want to thank everyone. That really cheered me up. And we're embarking on holiday season, so I hope you all have a lovely break. I think next week I'll probably just do a market report rather than the two-part sections, but I will be here next week. And I hope you all enjoy the break anyway. And I'm going to be going hopefully on lots of long country walks and picnics on the beach if the weather's good. That's it from me. All the best. See you next week. Bye.